Welcome to today's Stocks and Crypto live stream with no FOMO charts. We are live on TradingView, YouTube, and Twitch. We also have a free Discord group if you'd like to join. Today is February 12th, 2022. It's a Saturday, about 9 o'clock p.m. Eastern Standard Time, Saturday night here. And just a quick announcement, for the next 1 to 2 weeks, I am probably going to stream on a Saturday night here around this time probably. Because there's just a different schedule that I need to do this month. And also there's some events as well. There's basically 2 kind of holiday weekends in a row. So I'm going to do it on a Saturday. Let's start with stocks. We're still in the stock earnings season. We're about halfway. So let's go ahead and check things out. We're going to start off with the S&P 500 here on the SPY ETF. We're on a daily chart right now. And what we need to make note of is, let's get rid of these gray lines. But we need to make note of support and resistance. This is why this is classical technical analysis. Is you see here highlighted in the blue, we had our support. Okay, just looking at this October till now price range, we have this support down here in the blue, but there also is a resistance line up here. Okay, if you're wondering like, why do we go down and then why do we go up? There's chart reasons, technical analysis, but what supersedes that are the fundamental reasons, stock earnings, and global crisis that's happening right now. So if we zoom in a little bit, you can see it a little better on a 4-hour chart, the price. And this sometimes happens. As a swing trader, I'm ready for this. I had a profitable week this week swing trading. We'll review some of those. But we had support, we bounced up, but we double top. Okay, this is a bullish support and then a bearish resistance right here on the start of the day, at the end of this day, but on the start of the next day, February 10th. Double topped, and bears took over that day and crushed the market on Friday. Okay, so we just want to remind ourselves for that. Now, what a lot of traders, or not a lot, but some technical analysts, we are looking at the weekly chart as well, is are the 2 scenarios that can happen. Are we going to have a lower high bounce on a weekly and then fade back down to retest support? So the 2 scenarios that can happen in the stock market, which is really important because it will probably impact crypto as well, is on the weekly chart, lower low, lower high. Are we going to make our lower low on the weekly? That would really start to confirm this bearish crash pattern that could play out because of the Federal Reserve tapering program with bonds as well. And so we just had too many negative events happening. If you just want a short summary, too many negative events in 1 month. So list them off mentally. Is we had Omicron COVID, we had Ukraine-Russia crisis, we had supply chain problems, we had just bad weather as well, affecting parts of the world. And then also we had bad earnings. Okay, so earnings from the stock market needed to save us in the market, but we can't always rely on it. That's why you always hear me prepare for 2 scenarios. I was ready for a crash. I sold all my trades on Thursday and Wednesday and Thursday, and so profited, and I'm done. I was done. So this weekend I could just relax, right? So the 2 scenarios is, okay, is it going to bounce down on the weekly? Could take a couple months for that to play out. If not, we could pull back. If we hold above the support 430 on the S&P 500, we could try to establish higher low and try to bounce up. But we still have earnings for 3 weeks, right? And the Russia-Ukraine crisis is probably not going to end in 3 weeks. I hope it does, but we'll see how that goes. Okay, so this is going to be a very similar chart on a lot of these indexes. Let's go to Dow Jones. The DIA ETF, DIA. All right, so let's just erase all this from last time. We're on a day chart right now. You could already see that the downward trending pattern from the daily in January, reversed, and we were trying to maintain this uptrend, but it got a little too overextended on shorter term time frames, meaning the day traders, it was a little bit too high priced. All right, so you might not see the signals on these longer term time frames. This is basically day traders, bears taking over and just crushing. Because we had uptrend reversal, it looked good. We just barely made a higher high, and on Friday, bulls trying to maintain the higher low, the bounce, but we could not make a higher high, right? If we had smash earnings and smash positive news, then we most likely should have made a higher high, but news was bad, Ukraine, CPI numbers, and then we pulled back, crashed down. Okay, so Friday, I didn't even touch that as a long at all, right? Because on the chart pattern, once I knew on Thursday we're starting crashing, I took all my profit right here in the morning, right? So I bought stocks here, and then I sold it here. All right, so that's how, as a technical analyst, as a trader, if you know what you're doing with charts, it's possible to profit even in some wild earnings like this week. If you're in my free Discord, by the way, if you just look at the watch list, a lot of stuff that data that moves the market is I've listed on there. So let me just quick rewind. It's up on a different screen, but last week, you know, crude oil inventories, economic data, the CPI numbers were the key. Okay, and then we're talking about inflation and interest rates, supply chain. That's all here on the watch list. So, you know, if somebody's a brand new beginner, it might not make that much sense. But, you know, at the end of the day, if someone's a technical analyst, it's all about the charts plus news. So again, we're in stock market earnings season. The news is going to matter a lot. You can see it on the charts. All right, so this is kind of messy now. But now we're going NASDAQ, tech stocks. All right. So we have this downward sloping channel, and you can see I called it was like a month ago, where I was saying we're starting to consolidate in this blue rectangle here. Consolidating, we lost that downtrend, and then we drew these two lines. I drew these two lines. So this is the resistance target. A lot of other experienced traders drew the exact same thing because we saw the price stop here and reject down. So even if you're a beginner, you could still draw your support and resistance lines, diagonal trend lines, and horizontal as well to get a grasp on the market. It just takes some practice. All right. So you don't want to draw after something happens. You want to draw it before it happens. Okay, so you could have drawn this at the beginning of February, end of January. You drew these two lines and you had an idea. Also, we had a double top here, resistance, rejection, down. So where could it possibly go in the long to medium term for swing trading is support is all this on the downside. 341, we look to the left, 328, 315 in terms of dollars. You could see the X marks the spot area is probably in the 330s to 320s down here in the X if it gets crushed that much. But we're getting a downtrend rejection, okay? So people who are just starting stocks in crypto right now is like, you want to be careful because we had 2 years of uptrend and the Federal Reserve is starting their tapering program. They're backing off. So it makes sense why we're having such a strong sell-off. Crypto is different. We had a pullback. Crypto did not crash, but it pulled back. We'll look at that later. So on the weekly, you can see the clear downtrend pattern could ensue. So tech stocks could get crushed even more. It's a matter of on these shorter term time frames, like a 1 hour or something like that. 1 hour, H4 or 15 minute on Monday, are we going to see the bounce? It is possible because it is a little bit oversold. And so even in this short-term time frame, you can see things pull back down. We could get a bounce up of how many percentage points is this? 1 to 2%. It's possible, but I'm not going to hold my breath for it, okay? Because why? Because it's still volatile. So let's take this as an example before we move on. So if we're just comparing indicators and price, okay, we hit a low RSI spot. We are seeing some bullish MACD momentum. But what you really want to see is a price pattern, okay? This is the big lesson of this week as a trader is when you see a falling knife type of thing is maybe you don't have to go so aggressive on it, right? Or manage your risk. Like for me, one of the big lessons for this week was, okay, if there's no pattern, then maybe don't buy anything. So next, let's look at some of these earnings that might come out this week, starting with Advanced Auto Parts. So keep in mind, what's on my watch list, it doesn't mean buy or sell. It just means the stock earnings is volatile, meaning it's going to move violently off earnings. At least 5, 10%, sometimes 20%, right? We'll look at PayPal and Facebook, how that got destroyed this week. Okay, this is why for stock earnings is all of a sudden you take half of the attention off the charts and you focus on the fundamental releases and the financial releases in the news. You don't have to read everything, but you just pay attention to it, right? Or some hardcore TA people, they don't even look at news at all. So, but I don't think that's a good idea in this day and age. All right, Advanced Auto Parts on Monday, Valentine's Day here in the USA. What is going on here? Same deal. Very similar uptrend off of the pandemic lows. This is starting to fall out of the rising wedge pattern. It has happened before. Let's turn on some EMAs. Just finding support above the 200 EMA zone. Still downtrending right now in this price range. That's never good. On the 4 hours, it's probably touching an EMA 4-hour death cross. So I'm incorrect there. Support. It's holding the support down here at 222. Something we want to watch out for. So Advanced Auto Parts, if you're a car person and you really know cars really well and you know Advanced Auto Parts really well, maybe. Okay, so let's just, for example, in this particular setup situation is, let's look at the downside and the upside. Consolidation, you get your support and resistance. 2 lines, very simple, very quick. How did I know to do that? Resistance, look at all these sticks up here. Wick, 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 wick. This is all price resistance, not going higher than that. Then down here, where's the support? Wick, 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 candle wicks. Down here, support, resistance. You draw that every time when you open up a chart. If it's parallel channel, you could use the parallel channel tool here on TradingView. And then what's the immediate price pattern? This is how I do my style of swing trading. I'm going to use the close. We just lost that support. It's right under there. Okay, so if we can actually measure this now, a 5% particular move could happen to 212. If it's extremely bad, maybe 10% to 200. Okay, if it's good, we might test the top of here, 4%, 232. If it's really good, we might hit 10% here at the top of this channel, again, 245. So right there, we have 4 targets, bear target 1, bear target 2, bull target 1, bull target 2, up here on the blue, second blue. Okay, but after earnings, most people probably just have to wait a couple days. Okay, this is not really the safest or the best time to be buying stocks in the earnings season right now. If it's about to report, because things are just so volatile. Bears are in complete control on the day charts, the intraday charts. So you want to be careful. If you're long or you're green, sometimes the best decision is do nothing with trading. You can still chart, but don't trade until you have a good setup, right? If I was an investor and I said I want to do Advanced Auto Parts, then I would probably, that's getting real messy. Let me use a different stock. Let me use NVIDIA. Let's just move on. NVIDIA. All right. So if I want some super deep value on NVIDIA, this is what I'm looking at. If you look at a 2-year Fibonacci support or resistance, I mean, 618 is where? $200 NVIDIA, 150 NVIDIA. That's it. If it gets really bad, okay, $100, $80, and $50 NVIDIA, I would buy a lot of NVIDIA down here if it's $50 again. If you know graphics cards, okay, if you know graphics cards, you know, the NVIDIA graphics cards, the 3090, 3080, 3070s, and the TIs, they're still in demand. So NVIDIA is still a good company, product-wise, okay? Not financial-wise, but product-wise. Okay, like, if you know PC, if you're really into PCs. But let's check this out. Hello, Taylor. Thank you for watching on YouTube. The end of the week was wild. It was wild. Maybe I'll circle back to that at the end of how I knew it was going to crash and how I got out as a long. Took my profit. How much time do we have? About 15 minutes left on stocks. Okay, so it's still an uptrend in the long term. Okay, if we're looking at like 2 years, somewhere up here is going to be a weekly high or low, most likely. Maybe stretching into March. But on the medium term day charts, it's downtrending. It's downtrending. Right? Downtrending right here. So where's the support? We have the earnings on the 16th. It's Wednesday. Draw a trend line on the top side, a trend line on the bottom side. And notice that this process of the swing trading is I'm not staring at the RSI or MACD first or EMAs. I'm looking at the price. Start with the price always, and then the volume. That's the key. So we are downtrending here. Bottom side target would be about 200 range. I'll just call it out quicker. Resistance target probably about the 280s. So the video is going to be interesting. They're going to have a surprise on their EPS and revenue. They're going to announce any new products or any partnerships. It's going to be interesting. NVIDIA is still alive. Although AMD is more popular, probably. NVIDIA is still alive. So just something to watch out for. There. Take a quick look here on our EMAs, downtrending on the death cross. 4 hours not low. So as a long, I'm not interested in that. As a swing trader, 15-minute, 1 hour, 5-minute is in close enough to a low zone. So maybe as a day trader, you know, somebody might want to scalp this if they want to. But you can see here, if all stocks are going to bounce like 1 or 2%, that would make sense. There's room here on the price to bounce up. But there's also room longer term where you can see this pattern bounce up, but then fade back down right into the earnings, or if the earnings bad, crash down into it. Right? Hold on, I'm reading a comment right now. Great, Taylor. Taylor on YouTube was saying that she did an options put, same day expiration with a target of 850 on Tesla using the TA from this stream or these streams. She was able to make about a 700% return on a same day expiration put option. Was not a large position, so that's good, but not a bad return for 700%. So thank you for all the education. Well, thank you, Taylor, for watching and joining and donating and commenting. Really appreciate it. Hope all the best goes for your trades. And we can look at Tesla right now, because just based on her comments, instead of me just talking all the time. Let's look at Tesla. So what is she talking about for people who don't know? So first off, if you weren't in the stock market this week, it was basically green for 3 days, and then it was red for 2 days, and it crashed a lot on Friday. The indexes. Okay. So for day trading terms. But all I'll say for this is the key comment, I think, for Taylor's comment on YouTube is that she's not putting on massive risk. Okay? Because if you read like some options or day trading forums out there, there are some people putting on ridiculous amounts of risk where it's actually gambling. It's not even trading anymore. Like people risking, you know, tens of thousands or hundreds of thousands of dollars, and that's not safe at all. That's not sustainable at all. But if we manage our risk and use smaller position size on something risky, like a same day option expiration or a day trade or a swing trade, right? The more risk there is, then if somebody wants to stay alive as a trader, is manage that risk and use smaller positions. So what happened with Tesla here? First thing, even before I look at the immediate data, I'm going to draw longer term trend lines because there's such a there's a pattern that happens all the time with the stocks, meaning that because of our pandemic pattern, I'm just going to call it pandemic pattern, where it was uptrending and maybe a little bit consolidation, hesitation, and we're starting to fall out of that rising wedge. It's happening on like every single stock almost. So you just want to watch out for that. Great, Taylor. I'm glad that this TA is helping. So we set up our support and resistance trend lines. My timer. Support and resistance, trend lines, and then also horizontal support and resistance. Because this is what advanced people do, the advanced traders. A beginner trader, I would say, just looks at like this or something, right? Or just or absolute beginner would just look at this and try to figure out what's going on. But you have to, for TA, you have to draw, put in a little bit of hustle, a little bit of work, and then everything starts making sense all of a sudden. All right, so even if you look at this pattern from a longer term, it is starting to consolidate and start to downtrend, just like NASDAQ itself. So you could draw this broadening wedge formation. What was the key? I remember saying that on my last stream on the 4-hour chart, there was that potential upside down head and shoulders, the possible. You just rewind that. The bullish target was up here, but at the same time, though, I remember saying if it doesn't break the resistance, that we might fade down from it. Okay, so I remember saying that this is not always the perfect pattern. It's not always going to work. So if you wanted to make it easier on yourself, you just draw one line. 945 is the number to break. 940, 943 is the number to break on Tesla in this blue. Let me use a yellow box right here. And if it breaks above that, then most traders probably would have initiated a long position right above the breakout. But at the same time, things were not actually hot for Tesla, and resistance held. And then we had the double top on the S&P and Dow Jones, etc., NASDAQ, and it pulled back down. How much raw percentage move was that? 9% down in 2 days, 4% on Friday. So if someone's doing aggressive options play or aggressive short, Thursday, Friday for the bears was heavenly trading. But for longs like myself, I got out right at the start of this, right at the morning, 6:30 or 9 o'clock to 9:30. I'm like, I'm out of here because this is not working, and the bearish formation happened. So let me speed up a little bit. Before I move on, let's talk about the targets though, because this is actually a measurable target if we want to get really into it. Okay, there's some kind of flag here. So we could actually measure this thing, technical analyst wise. 6% to 9%. Did we hit that? We almost hit that target, the breakout. So 6% would be about 845. If it goes really bad, 12% would be 745 range. At this point, I would zoom out, Fibonacci this thing to get the longer term levels. That sounds like it's a Fibonacci level. $382, 50%, yes, it is. Even Fibonacci from 2019. Now it's getting really ugly looking on the charts. That's the 382, yes. So it is confirmed with Fibonacci as well. So the easy summary would be, you can see this blue line down here. Let me draw a clean one. And then we could get try to figure out our support levels from it. I call this like a megaphone pattern. It opens up like a megaphone or broadening wedge. It looks like right there, 750, it's multiple correlations. There's a Fibonacci level, there's a trend line, and there's a horizontal support level and measured move target of the triangle. So 780, 750 would be a potential longer term downside target. We want to watch out though, because on some of our indicators, it looks like, yes, we are in this death cross right here on the 4 hour, but at the same time, it's getting to that low zone, meaning that at a certain point in time, it's going to crash down enough and then bears have to close their position, probably somewhere in the mid to upper $700 range. And because the 1 hour, the 15-minute also has an upside down head and shoulders and RSI. So it really looks like Monday, Tuesday, we might get a little bit of a day trade bounce, meaning low, high, low, maybe a lower high on this bounce right here. If you're trying to day trade this, maybe like a 1.69%. Oh, wow. Taylor, thank you so much. Thought you were on your phone. Taylor says, as always, thank you for your streams. They're incredibly educational and are helping me make some good income. Yes. Yes. Love to hear it. Love to see it. Thank you so much, Taylor. I hope your trades go really well. I think at this point, because it sounds like you're having some pretty good success with your trading, oh, thank you so much, Taylor. Wow, so generous with the 1,000 coins. Oh my goodness, the 1,500 coins. Oh my goodness, this is the greatest. 2,000 coins. Are you kidding me? I wish I could give Taylor some VIP badges or something like Twitch. Thank you so much, Taylor. Wow, very generous with the coins. If you have more requests, I mean, if you want 4 requests, we could just do it. Just let me know any stocks you want to look at, because that's streamer style. If you want a request, anyone who donates can have an immediate request. So if you donate 4 times, you can get 4 requests, Taylor. Anything you want. So just let me know. So I was just saying that just a side note is if somebody's on like what I call a runner, somebody's having successful profits on trading, is the risk management and the emotional management, just from my experience, is critically important, because if you've actually done any strategy testing or back testing, you'll know that sometimes even if a profitable strategy works, there will be periods of drawdown and periods of almost randomness where, for lack of a better term, where a trader could lose 10 times in a row or 20 times in a row using a profitable strategy, and it's just a bad period in time. So at the same time, anyone long or short could be having a good run or a bad run, so to speak, if they're using the proper strategy and system and technical analysis. But what can kind of ruin that is what I call like the human condition. Is if we get real, I'm not talking to Taylor right now, I'm talking to everybody who's going to watch this right now, even myself, because this happened to me before, happens to every trader, is that let's say if you make like 5 successful profitable trades or 10 successful profitable trades, but then on the 11th trade, a trader sizes the position too big and they lose. And then they wipe out, they lose like 25 or 50% of their monthly profits. Like that happens. So this risk to reward ratio is critically important. That's why once in a while I always talk about it, right? It's day trading. I'll just use on the chart here. You have your entry, you have your stop loss, and your profit target. So the problem becomes, it's kind of like if you've ever been to Las Vegas or played cards or poker or Texas Hold'em, is, you know what I'm talking about, is it's like gambler's fallacy, where if you win 5 times in a row, you might put more money on the 6th, 7th, 8th, 9th, 10th trade, and then then the risk management didn't work anymore. You know what I mean? So just have to be careful. So for example, if somebody's, let's say I'm swing trading Tesla myself as a long, and let's say I have $10,000 or something like that, you know, the trade, every trade needs to be the same risk, dollar risk or percentage risk of the account. If it keeps changing every single time, then you're going to have some really erratic, weird results. Even if you're doing things right, right? You could do 5 trades right in a row, and then the one time you go all in, or one time you risk too much, or forget stop loss, or just bad luck with the news, like CPI data or something like that. People got blindsided by that, and then it crashes on you. But then you sized up too big, right? That wipes out your whole month or week of profit. Like, you have to be really careful of that. That can happen. So that's why for me, it's always minimum, 1% account loss in dollar value. So whatever that is for you. So again, this is extremely important. We have to spend some time on this. Is if you have a $10,000 account, 1% loss is $100 US dollars. So every trade you're doing, you only risk $100 on the trade, and then you try to make $200 on that trade per position, and a maximum account risk is 10%. So $1,000 maximum risk monthly, right? That'll keep you alive at least for a year of trading, at least for a year of real money trading, swing trading. The problem is when people start using leverage and margin, and they're not using strategies and systems that work, at some point, you could just tell. At some point, there's going to be something that goes wrong, an accident, and then that trader would have blown up their account. They lost all their money in the trading account. They went bankrupt, right? So please, if you're starting out as a beginner, do not use margin, do not use leverage, do not borrow money, do not take loans. Just, cash trading. Probably if you're starting out, you have to swing trade or invest and manage the risk on the downside. How much maximum dollar value are you willing to risk on the downside before you can even make money on the upside, the 2% or 4% or 10% or whatever your target is, right? This is day trading metrics, the 1% to 2% minimum day trading. So this is for larger size accounts. Okay, so thank you so much, Taylor. If you have 4 charts, if you have 4 companies, stocks, or crypto, just let me know, and then I'll just do it at any time during the stream, whatever you like. But let me just finish up here, unless you have requests. So Shopify, Walmart. Shopify, still popular with the e-commerce people, but look at this, though. We have to check this out. The daily downtrend, the death cross. Oh my goodness. The daily death cross. Okay. So if we really are honest with ourselves, when did we have a daily death cross on Shopify? It hasn't happened for years. Hasn't happened since 2015. Okay, so this might not be the greatest example of death cross, but 4 hours. We haven't had a 4-hour death cross for about a year. At least September, that last Apple crash into the earnings. Okay, but is it bottom for price on Shopify? No, it is not. So even though prices are crashing, if you want to be a conservative investor and protect your capital on either direction, is just watch out for these types of plays. Yes, could we have a bounce? Yes, it's possible. Low, lower high, lower low, lower high, right here. So at some point, once all the crazy volatility is over, just like Bitcoin, you might get this bounce. It was tried to double bottom up here, just like Tesla. There are a lot of these 10 to 20% targets, but it failed. Bears took over. Also, Ukraine and Russia is getting a little more serious in the news. If you're keeping up with it, it's getting kind of serious. So, 2 targets that we'll have. This is another Wednesday earnings. I'm not going to play Shopify personally. Let's skip this one. Nice. I just have to say that because the risk management part, because I see people online and I heard stories of people who just blew up their account in one trade. It's very sad. And then for personal experience, you know, you could have just like phenomenal run, and then the one mistake could be a no stop loss or too much position sizing, or sometimes, you know, misinterpreting the chart or misinterpreting the news on the earnings report. So everybody's human, and so we have to kind of price that into our actions. I'm going to say, again, this is not directed at one person. This is general advice to anybody watching this. And you could, if you read books on it or look on TradingView, YouTube, Google, you'll find a lot of information about risk management. It has to do with human psychology and the mindset, emotions, fear, and greed. Wonderful, wonderful. All right, so Shopify, we have this little triangle down here, and 25% up or down could be the target, also 10% as well. If we have a 25, let's say Shopify has bad earnings, downside target 627, also 730 on the downside. So 2 bearish targets. How did I do that? Measure the draw the triangle first, then measure it. Also confirm to the left, is there support on the left? There is. You can see here, I'm talking about these two blue as well. There's probably one down here at 558 if it goes real bad. But what we can see here on these charts are, it is getting into a interesting spot of value. We're holding right before the 618 Fibonacci, the golden ratio of Fibonacci. So if Shopify has good earnings, we could actually bounce up that 12% in a few minutes. But that's very risky earnings type of trading. All right. And then Walmart. Walmart's a large discount retailer, department store that sells almost everything in America. So Walmart's still, you know, very important in people's daily lives for consumer discretionary buying items for their homes and such. So we have to great. Just have to watch out for that, the earnings. So Walmart, look at, if this is a good example. Okay, this is educational right now. Walmart. Is Walmart going in an uptrend, consolidation, or downtrend long term, 2 years? Okay, this is a good practice. We turn off all the watch lists, turn everything off. And then I use a line chart to make it easy on people. Since the pandemic started, let's just say from 2021 until now, till right now, this box, is Walmart going uptrend? Is it going consolidation? Or is it going downtrend in the yellow box? This is good. Kind of like a pop quiz thing. Just let me know in the comments, because as traders, as technical analysts, we need to know right off the bat. Boom, on a day 1 day chart on this stock, we should immediately know what the trend is. Taylor is right. Taylor's correct. It's consolidating, which means sideways action or trading between a range. So when you open up a day chart, this is the key, and most people don't do this that I talk to, is if we look at 2020 to 2021, Taylor's also correct. It was an uptrend. Okay, you could see it up pattern. If you draw some trend lines, it's angling up. But then when we went from 2021 till now, all of a sudden that stopped. Okay, that stopped right here. We went from up, you can just draw an arrow, to a sideways. So now the two big levels on Walmart. And Walmart to me is like a signal of the consumer discretionary sector. So same thing with Target store. There's 3 levels you play right here. 3 levels. Yes, because it's holding support here on right here. 7th. What price is this? 135. This is 1, 2, 3, 4, the 6th time we're here. This is an extremely important support level on Walmart, 136. Also, it's kind of turning into a descending triangle style. This is where we use TA. TA 7% to the downside. Once we lose 135, 134, and it breaks down, where's the target? 7% to the downside. 7% is a perfect swing trading target. And it's literally the gray line, the next support line. The TA is working so perfectly. So if it's a downtrend bearish target, the first one is 7% here. Second target, 40%, 114. And that also coincides with the support on the left side, the cluster. It's all playing out correctly. But if we have bullish earnings, so who knows, maybe because of what's going on with the pandemic, is if people start shopping a lot at Walmart for the past quarter, for 3 months, is if it's bullish, okay, it's right at the support level. We could get a bounce breakout. It could do that as well. That would be phenomenal for Walmart. I'm sure investors would be super happy about that. But to me, Walmart has some competition. But think about it. There's Amazon for household items. Like if I want to buy tissue paper or, you know, Kleenex tissues or whatever, I could order that on Amazon. I don't have to go in the store to Walmart. So we think about it like that. Or if I want to buy soap, I could buy it online if I wanted to. So that's going to be interesting. That's some competition. So the bullish breakout would go to the upside like that, 145, 152. If it breaks down those two targets. And I'm talking a lot right now because this is the educational part. This is the educational part. Okay. So if you break it down, what am I doing? I'm looking at a chart, a company that I know is going to be volatile. I'm doing technical analysis, support, resistance, trend lines. I'm getting my targets. If I really wanted to take the final action step, I would actually put alerts and orders in my broker and commit to this, what's happening. But for me, I'm going to wait for the earnings because I don't play the day of earnings. If you've ever tried doing that, you'll see how that's probably one of the most volatile situations in stock market. Is I wait till the next day because the big money players, the hedge funds, institutions, they're not going to play post market. They're going to play regular market hours, right at 9:30 on the dot. It's going to start their attack run in the market, whatever direction, bear or bull. So earnings a little bit too volatile. It's not just about volatility too, is the professional firms, they get data before the retail does. If you notice, if you try to play earnings by yourself on a exchange, is the price will move first and then the news will come like 30 seconds later. So that's just hedge funds paying their millions of dollars to get the information 30 seconds faster. And there are algorithms and robots and bots programmed to read the news release in seconds and execute their trades accordingly. So I don't want to face off against that. I know that exists in the market. So the way you beat the algorithms is you zoom out, use longer term time frames, and you place your orders at deep areas of value to get a better fill, get a better price. If you're long, we want discount. I would like Walmart. If Walmart goes down, let's see. And what I'm doing here is a lesson for all stocks. If you ever see this pattern again, it's the same analysis. If Walmart goes to like $120 or $100, I would probably go long there as an investment because the intrinsic value is probably somewhere over here in the upper hundreds. Yes, the implied volatility of options, sometimes a little too high, so I don't even touch that. But I'm going to go a little longer on stocks today, okay? Because the TA I'm doing on stocks, you could just apply that onto crypto. It just depends on the situation. So I want to actually review a few of my trades that I had this week, which I rarely do because I do not want to cause FOMO for people. But there are some lessons here. So what I traded for 3 days was BKKT as a long. And BKKT was an interesting play. Backed Holdings is a crypto wallet. company as a long is good play. So how did I find this one? I found this like last week at the end of January, just on my personal time. Is like after the stream was over and I was just looking at charts and I came across BKKT, which I've traded. I traded on the initial long side here. I traded this bounce here. I stayed away from here. I got a little bit of this one and I waited for this right here. Upside down head and shoulders, bullish pattern on the 4 hour. So I found about 10 of these charts last week. And why did this one go up? It's because sometimes you have the crypto correlation. Bitcoin went up on Friday, last Friday, Saturday, Sunday, and then the most likely correlation was, okay, if crypto's going up, Bitcoin's up, then probably some crypto stocks going to go up as well. Had a wonderful trade, wonderful profit on this. The target on this was 37%. The breakout went almost double that, went 70% with the pullback. So sometimes you get monster wins like this. Sometimes you get monster trades like that. And BKKT also had a little bit of a short squeeze as well because this is kind of abnormal trading. Also, the upper trend line was broken, acted as support, broken, and then we're off to the races. So this is why I believe setups in stocks like this, why Tesla didn't go up, because people were busy doing this. There's Peloton and there's BKKT. And there's fun on Monday, but that crashed, that got destroyed by shorts on day trading. But there's stuff like this. So that's why I was saying Tesla was not the only one that had this pattern. BKKT had crypto related positivity and short squeeze, shorts and put options unfortunately got crushed. And then it rallied out for several days. And all these indicators, I would not, please do not long this. The chances of it going down are much higher than 1 week ago. So yes, it just depends. Because I started with stocks and crypto trading just like normal style, so I just stick to that. Sometimes I do options if it's a really good play. But for me though, I do more longer term trading. Okay. I did day trade the first part of this though, just to see what's going on here. But there is some serious signals saying that this thing could come down, at least a little bit of a pullback, because you have the higher high, higher low pattern. And the 1 hour is building. 15 minutes kind of neutral. The 4 hour, but if you zoom out, it's not low. Okay, here you kind of topped out with the bearish divergence pattern, the bearish momentum. Little bit right at the top of Thursday. So I closed my BKKT position right here, right at 9 o'clock in the morning. And then 9:30 as well, I day traded IRNT, which is very, very volatile. I do not advise people to copy what I'm doing because it's very advanced stuff. If you're a beginner, probably do not day trade. If you're a beginner, I would not recommend options, shorts, day trading. I would recommend swing trading or investing. So we found that, and this just from experience, I knew, okay, if Bitcoin's going up, then like, you know, Overstock, right, blockchain, BKKT, Coinbase, that kind of stuff's going up. I'm going to look at it, crypto, yeah. How do I find, we have a question here from Taylor who cheer donated, so let's answer these questions. How do I find stocks to day trade or swing? So for that, it depends on what direction I'm going. So if I'm a long, let me set a timer so I don't go too much. If I'm a long, I'm looking for a low price. So I look for, BKKT has been on my watch list since October 2021. So it's just, I'm looking on my watch list. I have like 300 stocks on my watch list. So I just look at it. I'm go down, it's kind of down here on the bottom here, but I really look at hundreds of charts on a weekly basis. And so I'm looking for a low price. So if it just, when I popped open this chart, it was very not hard to spot for me, at least, where I'm going through the watch list, and then I happen to just do this. And BKKT somewhere down here. And I said, wait a second. It was right here, end of January. I'm like, whoa. This thing is way low. This thing is way low. So this is just kind of a chart pattern that I like to see. My style of trading is kind of medium-sized companies, medium-sized market cap or large-sized market cap with some kind of catalyst with a medium-sized amount of shares float. Basically, I like medium-sized volatile stocks for swing trading. So I just know visually, like, wait a second, this thing is way below the Fibonacci retracement, the 1-to-1. It probably almost hit the 1272, right? So Hood was something like that as well. I remember Hood, you could see it did crash, right? So Hood has the similar pattern. This is what I'm talking about. If you study charts and learn it enough, you'll recognize this: the IPO pump, the fail, the attempt, the lack of support, and the crash down. And then somewhere way down here, it'll pop. Okay, there are other indicators like low RSI and stuff like that. That's, you know, if you look on TradingView YouTube and you study RSI, that'll help you too. But if you look at Robinhood, there wasn't a clear upside down head and shoulders. There was a double bottom here on the RSI, but BKKT, like if you look at it, that was much more visually popping out to me, this, right? So same thing. What also reminds me of is like RIVN as well. You see the same thing is you have the IPO pump, the downward bounce, okay? And then you have the potential upside down head and shoulders on RIVN as well. So this is on my watch list as well. It kind of failed though with Tesla. So it failed. But there was something there. There was, just like Tesla, almost we had it. But I think the money flow was BKKT and people just skyrocketed BKKT. But here on Rivian, it's still similar. Eventually, if there's any bullish news on the EV sector or Tesla, you might get a pump here. But watch out for it because it is starting to downward trend. So again, on Rivian, $58 and $68. If you break down to 56, then we might head straight down to 51. So this is a short, maybe put option play. But if it holds above here on 58, it could bounce up to 67. This is still consigned. It's a little bit of consolidation, but more like a wedge. So I'm still watching Rivian. If it happens to break up to the upside, it's still earnings. You have some space here until March. So that's basically what I do. As a long, I'm always looking for low price. So let me try to find something really fast that if I saw on a chart, like I'm not interested in that. Let me try to see. We'll look at crypto. I'm going to go way longer today. I'm giving out a lot of education. So let me see here. Okay, let's just look at this like an XELA or something. If I'm looking at the chart, for example, of this year, 2022, and this applies for crypto as well. If I see this type of thing, it already bounced up, starting to fade down, I'm not touching that as a long, okay? I just know my strategy, my system from experience is, because I know on the charts, this means that it topped out here on a lot of shorter day, intraday momentum type of stuff. Over here, you see that on the RSI? I just know for experience. Is okay, if you see this thing up here, this is probably up here, and it's gonna go sideways and it start the MACD cross down, you get a bear break to the downside. If you study indicators enough, you know that, or if you study the price enough, you'll know. Getting comments on YouTube, let's see. Did I see Amazon added Rivian's value to their key for earnings back when Rivian was $100 plus, which pumped their earning? I actually did not see that, but I know Amazon has backed Rivian. So yes, we shall see. We shall see on Amazon. Again, I'm answering Taylor's questions. She donated 2,000 coins. So if somebody wants to get priority in the request, feel free to give a cheer donation on TradingView. So Taylor's next question: high volatility with a certain market cap. It depends. Yes, I don't trade super low market cap stocks, or it has to do with volume as well. Okay, if it's really, really, really low volume, I don't touch it. Unless if if you really want to play low volume, then you got to do like a, very, very small percentage of your account. I'm talking about maybe 1% risk maximum. Okay. With the example, if somebody has a $10,000 account, then maybe if something's extremely risky, maybe only put $100 to $1,000 in that. $1,000 is too much though in that example because it's 10% risk. So maybe like a few $100s, which is 1, 2, 3% risk, depending on the situation. But what I'm saying is for like an XELA type of thing, where here, if you look at the volume, it's a lot of volume, 75 million. So it's day trading, but it's such a penny stock. It's 66 cents. This is like the ultimate meme stock. Nothing really happens at XELA that much. So this is just a low oversold bounce, and then we popped up just like everything else in the market in the past weeks. Huge 113%, but you don't want to be risking all of your account on this. Okay. And I guarantee there's some people on social media that FOMO'd in on the top right here. You have to have emotional discipline to just say no and walk away from the market. You see something, you missed it. If you have real emotional problems, just say no, close out whatever you're doing, and turn the computer off. As a trader, it has to be that discipline. If you have some emotional like stability in that moment, I would say actually try to chart it first, make a plan of attack, have some general idea alerts, and then turn the computer off. Right, but this is not a really good looking stock. The only thing was it happened to double bottom here on the support in a super long time frame. It bounced up, but it's still downtrending. XELA is nothing's happening on this thing. It's all social media hype. Hood is slightly different. It's it's a real stock exchange. It's different. And yes, RIVN since the IPO price has approximately down, yes, 60%. So it was a good deal right about the end of January. 65% off. That's golden ratio as well. If RIVN ever goes down 80, 90%, so sub $4, I'm sure investors are just going to pick that up if they believe the company. But I think that RIVN, just in case, because remember what happened with NKLA, if you know NKLA EV company, some companies are fraudulent, okay? Or some companies are, dare I say, scam company type of stuff, right? It's a stock market or crypto market. You can't believe everything. Can't believe anything. But RIVN is different because it's backed by Amazon, so that's why it's a different story for me. NKLA, after the insanity of the first pump right here, NKLA died, basically. The stock died, for lack of a better term. Excuse me, I shouldn't say died, but it crashed, it downtrended. The momentum faded is what I'm saying. So it went up. I remember that insanity in 2020, and then the downtrend here. But even if, so it's not just about, low price, it's more about, is this even a good company? So just like Warren Buffett taught me, if you read Warren Buffett books, if you're an investor, I would recommend Warren Buffett because he holds for his entire life the stocks, the positions, unless something goes wrong. So what he taught me in his books, and if you want to read any of his books or just look on YouTube, is he said, we're not just trading stocks, you're buying the company, the shares of the company. So it's like you're actually buying the company in real life, like you're going to become the owner of the company forever. So in that aspect, do I want to own NKLA forever? No, I don't. Would I want to own Apple forever? Yes. And it's like a really established company with Warren Buffett criteria? Yes. Amazon? Probably yes. Now the stock price is the difference. Okay? Because if somebody bought Amazon here on November 18th, they bought $3,700 dollars. but then now it recently 1 month ago crashed down to 2,710 and now it's 3,000. Somebody is down 15 to 25% on their investment, which is horrible. Horrible. Okay, Amazon was consolidating, but they still bought somebody. I'm using imaginary trader. Somebody probably did it. Is they bought at the resistance at the ceiling. No, no, no. Right? As trader, we don't do that. Sometimes though, you try to buy the support, but when something really bad happens, the support will break down. That's why you always have to manage your risk. It's not just all about blindly buying support with all-in money. That's not sustainable. If this was one trade, let me erase it. If it was one trade right here in the blue circle, and you're using proper 1% account risk, if you lost that, it might have went down 2, 3, 4%. You sell it, who cares, right? Who cares? Then if you're a swing trader, day trader, you might have gotten aggressive again, bought the breakout here, make some money back, make some profit back. The earnings crash, maybe after that, during that. A little risky, but somebody could have made their money back if they messed up on this support. Exactly. Buy put option at the ceiling rejection or short at the ceiling, right? Support resistance. It's oftentimes the most overlooked, the most important tool of technical analysis. Nobody's using it. Okay. I'm going to do a little bit of crypto because I did a lot of education on charts for stocks. We might go over time here, but let's do some crypto just for people who are waiting for that, and then we could come back. So Taylor, if you have like 1 or 2 more requests or questions, just let me know. But we got to do Bitcoin because I don't want people to wait a little too long. So, okay, we're going to do crypto now. Okay. So keeping in mind everything we just said for an hour about technical analysis, directly apply that to crypto charts. All right. So we know we're in the green on crypto on this. But now what happened here? We hit the resistance of this yellow line on top. The blue line, you see that? This is why I drew that. I drew it 2 months ago saying this could be the spot or maybe somewhere down here in the 50% range. Generally, I said that. And so you have it here. The breakdown of support, but then this was getting tricky or suspicious, the 1 hour uptrend as well. Okay, the uptrend on the price. So I remember saying on the stream like 2 weeks ago that, wait a second, we have an uptrend here, watch for the breakout, and it broke out, and then we hit the resistance right on the top. So what we need to know for crypto is crypto does not exist in a vacuum. Crypto is an asset on Earth. We're all connected to the same internet. So if anything really bad happens in stocks and commodities indexes, we're going to get a pullback in crypto. That's exactly what happened. There's also a double top formation, just like the S&P 500 on the 4 hour. So there is a correlation when it occurs. It was about 4% to downside the whole crypto market. Did we go that target? Let me see. We did. We hit the 4% target. The 8% target for the crypto market is down here. 1.72 trillion, back to our support zone. So watch out for this. Watch out for our 4 hour. It was golden cross, just lost that, holding above the 100 EMA in orange here. So if I draw a support trend line down here, it could fade down one more time to the 1.8 area. All right, let's look at Bitcoin futures. People ignore Bitcoin futures. And again, I called this out on stream live saying this support trend line might be a bounce for Bitcoin future traders. Exactly what happened. Just from experience, I know, wait a second, there's support here. This is a classic TA. And then we had the breakout above this line, breakout, topping out here. So it looks like basically we're making a higher low. It could pull back all the way down Bitcoin to 39,000. If it holds there, then we could get one more pump to the upside. But the fact that we had a rejection here, we had to watch stocks very, very closely if you're doing both, or just watch your crypto very, very closely, because if you look at the chart right now, Is it a low spot of value? Just look at the price, turn everything off. I'm looking at Bitcoin futures. If I look at the chart like this, at this downtrend, is this X, is that a low spot of value, or was the circle a low spot of value? To me, the circle was a better spot of value. It was dangerous, and fear, uncertainty, doubt in that tech crash of PayPal and Facebook nonsense, etc., right? But the Warren Buffett rule is be greedy when people are fearful, and then be fearful when people are greedy. So people were starting to get, generally, traders, greedy or FOMO or hyped up about the price right up here in the 44,000. So maybe trim down some crypto positions, depending on your time frame. So what's next for Bitcoin? Let me see. Now you just play your support and resistance. Okay, so we know we have a resistance up here 45, 42, gap resistance here at 40,000, support at 39, 37. So again, draw the trend line. Now you have an easy target right there, somewhere around 40,000. Psychological also makes sense. It's going to try to hold these EMAs here in the 4 hours. Is 1 hour super oversold? No, it's not. So I'm not going to long this. The only thing that would make me stay is if we have strong support of 41,000, and then it's actually going to turn into an uptrend, right? Because you can see here, higher low, higher high. It could make the higher low. I'm expecting the higher low, which would make sense if the RSI will pull back. Then we get momentum, just like over here in the circle, and then you could actually make money as a long. The problem is when we just react to crypto, so something goes up and then you try to chase it up, is not the optimal strategy, right? It's when things are coming down or going sideways, and then you jump on that if it's a good asset. But if it's a bad asset, you just skip it. So it matters, your discretion matters. You have to kind of know things like what are good stocks, what are good cryptos. So Bitcoin is obviously a good crypto. Same thing with Ethereum. Let's look at ETH. You just use a blank one. So like a Bittrex or Bitfinex. Use. Let's use forex.com. Blank chart. I'm just using a blank chart. So I'm opening up Ethereum chart right now. What am I seeing right now? Again, it's sort of like Walmart. This is what I'm saying. You look at charts and you learn stuff, and then you can say like, wait a second, the long term, are we uptrending right now? No. Not as strong, right? So we were uptrending from 2020 to 2021 crash. We try to get that last leg up to break 69,000 Bitcoin area up here, but now we have a triple top, and now it's consolidating on the weekly as well. You have to realize for crypto, we have not made a significant higher low in the weekly for some time now. We could crash down all the way to $900 Ethereum and still be fine in a weekly uptrend in the next 5 years. We had a little baby one up here at 1826. Okay, so you have to realize this of what's happening on ETH. If you're a super bull holder on ETH, then what's happening in the world kind of matters less. If you're on a 5 to 10 year time horizon, like a super holder, you're going to hold the rest of your life. It's a different story. It's just we're looking at the price right now in time that's being affected by all this news. But if you draw some lines, you can see if we have a catastrophic event, there is we could crash down all the way to 1,500 on a super bearish pattern. But if we continue to hold this little yellow medium term trend line right here, it's right at that support. Okay, if we use this Fibonacci, it just bounced off the 50% retrace, and now we're holding. So Bitcoin's still in this type of pattern, just barely holding on to a uptrend. Bullish case, higher high would bring us to, after assuming this little spot right here of all cryptos actually survives, and we're not going to crash back down to 2,274 on Ethereum. It needs to hold above 2,600 and then try to make one more higher high. That would be a bullish case scenario. There is room here on the daily charts. Okay, we're kind of in this sub-neutral range in the 45 RSI. MACD's open. It's just, are we oversold on our short-term time frames? Our 1 hour, yes. Our 15-minute, yes. So we could see the bounce, again, correlating with the stock market bounce on Monday or Sunday, depending. Crypto might happen a little faster. Okay, so somebody asked me about Ethereum like 20 minutes ago. That's what it is. The resistance is 3309, immediate support 2830, support 2662, and we have to hold above that. If not, it'll break bear and hit the 2357 level. If it goes really bear, meaning this uptrend fails and it was just a little lower high bump, then I'm looking at 1732. That would be an interesting spot. That's why you get prepared ahead of time. Same thing, Bitcoin, my idea, it was in the longer term downtrend. We called this. Then we finally hit our oversold upside down head and shoulders on day chart. Higher high, higher low. But you can see here a potential upside down head and shoulders on Bitcoin daily. Okay, this is why I spend a little bit extra time on the charts, because if you just look at RSI and then you say, oh, nothing's happening, and then you turn your computer off, is, well, what about the price though? Because the price is what we're actually trading here. So if this happens, it might. Inverse head and shoulders, bullish reversal pattern at the bottom of a downtrend. There would be 20% to the upside if it breaks above 45,000, which brings to 54,000 Bitcoin. If it goes 40%, which it might, in the breakout, 40% is $62,000 Bitcoin, which is totally possible. Okay, we just believe in the TA. But what the same idea still applies is it needs to pull back down, cool off on the RSI on the shorter term time frames, find the bottom, let the day traders play the support right here above 40,000, 41,000, bounce off it, break out, then we might get that bullish run on crypto. But same thing we just saw with Tesla. If there's not enough buyers, not enough fundamental news to pump us up, it could get rejected right at the blue line at the 45,000. So for me, if the too long didn't read, if you want simple, fast, is support right here at 41,000. Okay, set an alert there. I am going to do it right now. Set an alert here. If you have a free account, I don't know how many alerts you get, but on Pro, I think you get 3 or something. It goes. I have a premium account, so I get like hundreds. I get like 300 or something. So. You just want to set an alert here. Bitcoin. Daily. Inverse head and shoulders. Possible entry right there at that price. Create it. And now that's in. Why am I putting it there? It's a significant support level. If I wanted to actually go down there, so I could maybe buy it down there. It's going to do that. And then I'm going to also put it on the breakout of the 45,000. This is how you get ahead of the market and you're not chasing stuff. Bitcoin, neckline, bullish potential breakout. So that you could do this for crypto and stocks. So if you have a free account, it's not really the easiest thing to do because your work will most of your work gets erased on the charts. So I would recommend, if you're serious about trading or investing, maybe consider a pro account on TradingView. Just for this. So you don't have to stare at the charts all day long if you're a swing trader. All right, let's go look at some other cryptos, see if we can find something. But the key that we already had this bounce. It was low here. I remember, if you remember, watch my stream 2-3 weeks ago, we literally on stream found the bottom of the move, and if anybody just happened to go long with percentage of their capital, they'd be up like 20-30% on the trade. But again, the problem is I know people are so busy in life, it's not people's full-time job, but from my experience is if you keep missing stuff in the market, it means that you have to put maybe a little bit more effort into the TA technical analysis manually. And then if you miss everything that happens, then you got to just set your alerts. Set your alerts. Like for example, let me just pull up like a Cardano or something like that, or Binance Coin. Let me pull up Cardano, right? This is why the swing trade, if you're a swing trader, you knew you got to sell. If you're a day trader, you know you have to get out here for Cardano. You knew. If you're an investor, you're still holding on to make the higher low above $1, right? So if you see this green box, we didn't quite hit the target, but we started to get our overbought. It's still too high on this swing trading time frame. So a lot of disciplined crypto traders, day traders, swing traders just got out right there. You didn't get a second chance here. If we're going to pull back down, it did hit this oversold RSI. I mean, the low is under $100. I mean, under $1 here. Hello, welcome to stream. Do a little bit of crypto as well. And I'm going longer because it's Saturday. So on like a weekday, I wouldn't go this long or talk this much. But so hopefully, Taylor, that helps you. I think I answered maybe about 3 or 4 questions. If you have one more request, just let me know. Any request or Q&A? Because Taylor donated 2,000 coins. Which, so grateful. Thank you for that. And we're looking at crypto right now. Again, let me finish my point. Is if I'm looking at Cardano, okay, because Cardano on a weekly is looking interesting. It's so high, but there is some MACD momentum building. Is it low price yet? No. So I think I'm waiting for this. You could see the crypto markets, like every chart almost looks similar pattern. You had the COVID crash, the rally for 2 years, topping out in mid to late 2021. And then we have our subsequent pullback. And now day traders and maybe swing traders are looking at an interesting spot of value. But you see the support here at $1. We lose $1. If we lose that, big trouble for crypto and Cardano. The next support down is 63 cents and then 38 cents. So longing all in Cardano right now probably might not be healthy. Okay. So again, if you're a beginner, you can see the indicators I'm using, but what's more important, Moisty Cheese has a funny name. Moisty has a question here. What indicators do I use? Like 90% of the time, analyze the price. Okay, analyze the price. Get your support resistance, because the trap that people fall into, I mean, I love TradingView. It's just if someone's a beginner or starting out or just learning the indicators, is the hyper focus on the indicators, like a RSI or MACD, but then they don't actually understand what's going on with the price. You get moving averages. I say this on like every stream. I'm not hiding anything. It's all here. Pivot points if you want. Pivot points on the numbers, volume. The 2 most important indicators that is going to help you is price, the actual price, and then the volume as well. But you have to learn how to interpret the price. Is what are these candles? What is this green stuff and this red stuff? Why does it look so different? You need to get so good that you could do a play-by-play of the candles. So if you're starting out, I recommend study price, understand price, study candles first, support and resistance, trend lines, before you get into indicator heaven here on TradingView. Because you need to know what this is. Like you turn the volume off, we do a play-by-play. What is the candle? We can even see here. Let's do like from a here to here example. So this candle, hammer candle right here, hammer candle, triple Morningstar reversal bullish pattern. So that right there, you need to be able to spot that, for example. Then you have basically 3 white crows or 5 white rooks or whatever you want to call it, 5 white knights, but basically bullish engulfing candles. Then you start topping out. Then you have a doji candle reversal signal. You have a evening star triple candle downside reversal, right? This is a triple candle upside reversal, triple candle downside reversal, right? So you got to learn the candles like that, the 1, 2, 3 candle patterns. You have a hanging man hammer. That's not good. You have a shooting star here. That's not good. You have doji here, indecision in the market. Doji, indecision. Doji, indecision. Then you play your support levels. You're coming down to support. That's why you had a little bit of a bounce on last week, but we're fading back down because we hit the resistance ceiling right here as well, right? So sometimes you don't need indicators if you're serious about TA. Basically, the most important indicator of all time is the price. The price. Indicators just help. That extra like 10, 20% if you're not sure what's going on. For an investor or swing trader. Day trader, you're probably going to heavily use indicators, but it's right at that support level. Things are building, but you can see here how high it is. Right? There's not much support here in the 60 cent to 40 cent range on Cardano. And I'm not just talking about Cardano. It's like everything. SHIB, Doge, all that stuff. Right? The next big support down is 60 cents down, 60% down. My goodness. Right? So if you're looking for value on cryptos, if you're trying to long it, and if somebody missed the 2020 to 2021, 1.5 years of uptrend, patience is recommended. Consider it, because it took us 2 to 3 years to hit this bottom. I don't think people realize that. It took at least 1 year, 2019 to 2020, and then we had the pandemic crash. And then that was the buy signal down here. Cardano at 20 cents. Wonderful. I longed Bitcoin here 6,000 and 9,000, and I sold at 60,000 just because of all the TA knowledge and experience that I've had and this practice that I've done. I spend so much time on the charts. I'm a charts nerd in a good way. All right. So with crypto, you want to be careful because crypto is a very volatile asset. Besides being digital, I mean, it's not everyday use case yet. There's a stronger use case for a digital dollar or the Federal Reserve coin. That would make more sense in the future than having 1,000 altcoins to me. Like the country, whatever country you're in, if they make a currency, a digital version, that makes way more sense. That's controlled by the government. I mean, it's centralized, but it's controlled. And, that would be kind of easy to pay for stuff. Like if go to the store, instead of using Apple Pay, Amazon Pay, or credit cards, if I just had a digital dollar, digital cash, and I scanned it at the machine, to me, that makes more sense. I'm probably not going to buy goods in Cardano. Cardano's doing other cool stuff though with the metaverse. Anyways, that's how I'm looking for value, right? Even on a daily chart, and this applies to all cryptos. It is at support, but is it the low price of Cardano that I'm looking for? It could be. It's in the 618 zone, but there's 2 zones that I'll be more interested in. If we lose the 618, I'm looking at 70 cent Cardano at 40 cents. If you want to set 2 alerts, it might help you in the future. I'm a trader. I'm more a trader than an investor because I like to play swings. So, like on Bitcoin, I sold it at the 65,000 on the first one. I'm not holding it until now, so I don't consider myself an investor on crypto. I'm more of a trader. Swing trader to be exact. But there are pros and cons. So if we want to talk about that for like 2 minutes. Day trading, you have to stay in front of the computer 1 to 8 hours a day, right? Probably if you're a serious day trader doing forex or stocks or crypto, you're in front of the computer up to 8, maybe 12 hours a day. Swing trading, I only have to work a few hours a day or a few hours a week if I really know what I'm looking for. Investor, maybe you only have to really look for like once a quarter if you're serious, or once a month, once a week. Thank you so much, Taylor. I really appreciate the 2,000 coins. I hope I answered your question request. If there's any more questions, just let me know next time. Hope you have a nice weekend, and hope you have a nice week. Thank you so much, Taylor, on YouTube. We'll end soon. So I'm a swing trader. Great. I am a swing trader. And, but if we look at, if we just, because sometimes we need some perspective, especially on crypto. Thank you. I'm going to have fun watching Super Bowl tomorrow. All right. So, let's see. Bitcoin, USD. We need some perspective on crypto and stocks. Long term. If we want all the data, we look at BLX. This BLX Pro taught me this. BLX chart, only day, week, and month. It gives you the Bitcoin spot price from 2010 until now. Bitcoin in 2010, my goodness, was 10 cents. But not everybody knew about crypto and Bitcoin back then. So as a, if I got in at Bitcoin 10 cents, then of course, yes, I would be a long lifetime hodler and probably never sell ever, right? But I got into Bitcoin in 17, 18. So, that's my frame of reference is the 2017 Christmas high. They made a 2018 low, 2019 high, a 2020 low, and that's already a tightening range. Then we had a 2020 breakout right here, which is the trigger, the long trigger. So I knew on my stream, there's a few people here that were following me on like in July 2020, May. We were talking about it. I remember some people asked me like, hey, what happens when Bitcoin breaks to $10,000? And I said, well, it could go up, right? It's a resistance, but it could go up. So I knew 6,000, 9,000. I sold here because of the consolidation, the TA. I remember on this right here, there's a head and shoulders on the weekly, so that's bad. This is bad right there on the circle. Okay, this is a bullish setup. If you know your technical analysis, ascending triangle breakout pattern on Bitcoin, at least 100% profit. We went 4 times that, 400% profit. Here we have the head and shoulders. We have the reversal signal that it's going to stop there, at least in the short term. Also in a lot of chat rooms that I drop in once in a while, people are going crazy with their predictions, saying 100,000 Bitcoin at this spot in time. The arrow or Dogecoin, $10 or $5. And I knew when you have maximum greed, maximum FOMO, you got to get out. Warren Buffett taught me that, and the charts confirmed that. It was hard to do it, honestly, emotionally, mentally, but I knew from experience this is the top at that time, and I got out. We crashed down on Doge, China ban, then El Salvador legalized Bitcoin in this general area, and we also had Federal Reserve saying over here in September, the El Salvador crash, and then Federal Reserve said Bitcoin is legal, no plans to ban Bitcoin, and we had that last pump, but we double topped here at 65 to 66,000. So living through all of this as a trader, I mean, all the way back up to here, probably I'll actually going back to like 16 is, I think, when the first time I heard about Bitcoin. Right here. So, if you get in super low price, like if you got Bitcoin $250, then probably hodl that, right? Never sell that, or take some profit, right? But if somebody bought in sub $1,000 Bitcoin, that's a hodl. But if somebody's gonna long Bitcoin 65,000 in hodl, then no, probably no, right? Probably not good trade. Why? Because Bitcoin just came from 3,006 and 9 and 10,000, and it went to 65,000. Okay. Then it pulled back, and now we have the potential double top M, which is, this is my idea on TradingView. You have the big red up here. At a super bear case, Bitcoin's crashing down negative 80%, which is why I drew this gray line here on the BLX. 5,000, if it's 90%, going back down to a $3,000 Bitcoin, if it's going to happen. But if we hold this support, which just bounced off 2 weeks ago, to 35,000, you can see it's making an attempt. There's an attempt that's happening right now as we speak in the market. Right here, they're trying to set up another consolidation triangle and then try to break out to the upside. So somebody asked me, do I think Bitcoin is going down again soon before it goes up? The answer in the short term is yes. Short term, like a 5-minute, 15-minute day trader style. Let's use Kraken. Let's go in. 5-minute, 15. I know some people are scalpers here. The answer is yes. Why? Because we had our hourly 4-hour bounce up. If it's going to be textbook trading, you make a higher low, you pull back where? Retest the 40,000, make sure that's safe. Make sure that's strong. Like I said, if it's going to be upside down head and shoulders, it should pull back at least a little bit to 40,000 retest in a medium term, 1 hour, 4 hour. If it's going to pull back down to low RSI again, that's going to be the next spot of long entry for me if it happens. Because if you have an uptrend, you have to buy on the dips of an uptrend. You do not buy on the dips of a downtrend because it's downtrending, which means it's going down. So that's the problem that people make is if you know, like people on CNBC and Bloomberg are say buy the dips, but there's a correct time to buy the dips. It's when it's uptrending up, not on the way down. And I'll show you example of why I avoid that. So this is the potential setup right here. I did mention this earlier, but there's a potential 20% play here on Bitcoin if it happens to break bullish above 45,000. Okay. So watch out for that. If it doesn't, if it's a Tesla repeat, excuse me, if it's a Tesla repeat, then the 45,000 top neckline blue line here, horizontal, is the resistance. And if the price keeps bouncing like this and just gets stuck there, then shorts are going to say no, not today, and then they're going to short it down to make one more lower low. On the day charts, that is possible. You can see it. So we need to maintain at least above, where is it? 40,000, minimum 36, 37,000, and then definitely above $30,000 or else Bitcoin's in trouble again. They already start to lose a little bit of momentum here on the MACD. You can also see this kind of pattern setting up right here. So those are the technical evidence reasons why we're probably going to get a pullback down in the medium term. I'm not talking about like, 5-minute, 15, 1 minute pops up. That could be the setup. Or this is the pullback already. This is going to be the pullback, 41,500, and we're about to rally on Monday because stocks have an effect as well. So I'm just saying somewhere here, wherever here is going to make a higher low and we're going to bounce up. Probably. What's going to make me change my mind is if it gets stuck here, then we're not going to bounce up. Okay. Why? A couple examples of why you don't buy downtrend as well. PayPal. Earnings, PayPal. Facebook, Meta. This is why sometimes you don't buy downtrend on the earnings. Even if it's all the indicators are saying it's low, but then what supersedes it is what is the company good or not anymore. It's Facebook, it's Meta now. But Meta Platforms, formerly Facebook, is it a great company? I mean, it's old. Facebook is old. Started in like, what was it, 2005 or something like that? 2005, 6, 7 or whatever. Back then, and we had like 15 years of Facebook, basically. And now they changed to Metaverse, Meta Platforms. They're trying to do that. They had a huge billions of dollars loss. Investors not happy about that. There was one little swing trade opportunity here, which I did say off the bounce of support into earnings, but I've seen earnings negative 20. I was watching this live. I think it was Thursday, if I'm not mistaken. It was a Tuesday or Thursday, but I watched the crash live. I was like, ooh, this thing is crashing down. And the earnings is, I said, what happened? $10 billion loss? Ooh, not good. Short this thing down. The first 2 hours were weird because there's such a, it had negative 20% to a positive 20%. This is why you don't play earnings. But you can see what happened. It's the negative catalyst down. Bears are in full control. So if 216.67 on Meta Facebook doesn't hold, you're going to crash down to like a 190 or 200 and test that. So sometimes if you're long, certain situations we do not buy the dip. When do you buy the dip? You buy the dip when it's going up. It's just, you just want to make sure you don't buy a top. That's the trick, right? That's where you use TA. If you're a beginner though, I'm saying so much information right now. You're probably like absorbing it, but at the same time, it's too much information. So what I'm saying is, for TA, at the end of the day, the one sentence is, what is technical analysis? What are we doing here? What am I doing here on the chart? I'm analyzing the price and the volume of a given asset, stocks, indexes, crypto, commodities, even works on Forex, etc. And then you have to know and learn here on TradingView, not just from me, but TradingView, YouTube, Google, books, about how do I know a stock is good? How do I know it's going up on the charts? What's an uptrend? What's a sideways consolidation? What's a downtrend? What's earnings for stocks? What are coin splits for crypto? What's market cap? Like, that's just some stuff like financially you'll need to learn. But for TA, it's what is the candles? What's the price? What's the candle? What's the price pattern? Where's support and resistance? Support and resistance. Let me draw. Support and resistance prices. What are trend lines in yellow? Why is this a resistance trend line? Why is this a support trend line? Why is this a support here? Why did it bounce here? Why did it crash on the earnings? These are all questions that as you get better, you study more. I've been doing this for like 4 or 5 years straight, almost every single day. I'm a charts nerd. 6 days a week, I'm looking at charts, 5 days a week. So I have a lot of experience looking at charts and knowing the patterns and what might happen and stuff like that, just from experience. And I read a lot of books and I studied a lot. Made mistakes along the way too, but you know, those are largely fixed by now. So that's just the journey of a trader. So wherever you are in your journey, and I'm going to end soon, wherever you are, if you just started day one today, or the first year, first month in stocks and crypto, on the charts, again, you have to learn how to analyze the price and interpret it and understand it and then prepare for it, whatever you're trying to do. You're trying to buy green, you're trying to go long, then prepare for it. You're trying to sell red, you're short, you're trying to do futures or options, which I actually don't recommend for beginners. But if you happen to be that person, you know, do you know what you're doing in the market? That's going to have a higher than 50% chance that you're going to win on that trade. And then I've been talking right now about the charting, the charting side, the TA side, but trading, actual trading, buying and selling, or investing, buying and selling, is a completely different skill. So I'm actually talking about two skill sets and I'm going back and forth, right? Risk management is actually a trader skill, right? It's not really a charting skill, although you're related to it, right? Meaning that risk management. So I talked 5 minutes about charting. Now for the trading is you only risk 1% of your account on the trade. So again, you have a $10,000 account for trading, day trading or swing trading. Swing trading is a little bigger, different, but in general, if beginners, just risk 1%. You have a $10,000 account, USD, you risk $100 on the trade, maximum. And if you're already feeling like, wait, but that's not enough money, how does somebody make money? That's where the emotion, then you know you have to probably need to work on the emotional side, the mental side of trading. If you run the numbers and you do the math, if you risk 10% of your account and you're wrong 10 times, you're lost all your money. So the 1% rule allows you to trade up to maximum, maximum 100 times, but it's probably less than that. But you get what I'm saying, right? Nobody really talks about that. Everyone online is talking about super FOMO plays of all-in or leverage trading, which for the average person starting out is gambler style. So there's a good post about trading versus gambling on TradingView. I got the email. Somebody wrote that article. It's really good. Really good. He talks about the 1% rule risk, right? So, you know, if you're serious about trading and investing and stuff like that, is you got to put some time and energy. Like you see me, I put 1 to 2 hours on a weekend. Not impossible. Minimum 30 minutes if you're looking at stocks. I talked a lot today. I'm giving free education today to people who are here, right? I'm live streaming live on TradingView, YouTube, Twitch. I have a free Discord group where I give out some free volatility watch list, index support and resistance, economic data. Some people pay for that, right? I'm giving away for free on the Discord. And we get requests and questions that is really meaningful. Like Taylor here on YouTube and on TradingView, she's been having great success trading options, right? But she's managing her risk. She's not going, you know, all in every single trade, because if you're wrong one time like that on options, you just lost all your money. That's impossible. Like the worst case scenario as a trader, you can't blow up your account or a trader's account. So it's about managing risk and not getting too greedy in the market, right? If somebody wants to make, you know, $1 million with a $1,000 account, it's probably not going to happen unless you get a 100x. You know, you get a Doge or a Shibu or something like that. You're not going to make that much money realistically, because statistically, the average stock market return on year over year is 10%, right? So you've had $1,000 account, 10% of $100, right? US dollars, insignificant. That's 1 day's work in the USA, right? Minimum wage a couple years ago. So you have to realistically calculate, what are you doing? Like what as a trader, what are my goals? How much percent am I trying to make a month? How much percent risk should I put on the trade? What's my maximum risk before I liquidate all my positions and quit the market for that week or the month if something goes wrong? Usually it's 10%. For traders, for investors, negative 25%. But negative 10% if you're a beginner, because I see it all the time. And I'm not chastising anybody. It's just from experience and people I've talked to so many times, is like on a Doge, for example. There were people that, not this chart, there were people that basically bought the top of Doge. And I'm sorry if that happened to you, right? But I traded, invested on Doge over here and here, okay, from experience. First one was way down here. This is a really good buy. But here at the 60 to 70, 80 cents SNL Saturday Night Live fiasco, there's a Head and Shoulders here. And I knew that's when people started foaming in the mouth on the forums saying that we're going $10 Dogecoin. And I'm like, probably not. I just sold all my Dogecoin here because of the Head and Shoulders, because of this trend line, saying if I don't sell it now, it's probably going to go down to like 32. That's 50% down. That's not good, right? And just walk your stop loss up. And then I traded with confidence, sold it. I bought here with confidence on technical analysis, and then sold it here on technical analysis with confidence, because I knew from experience and charting so many times, this is likely a top. Other indicators confirm it, but you just look at the chart, you'll know the pattern. Okay, so I went overtime. If anybody has any last requests or questions, please type it now in the chat room on TradingView, YouTube, or Twitch. It's a Saturday right now, so I'm going to go 15 more minutes. Usually I only go about an hour or 1.5 hours, but we had a lot of good requests in QA, and there's a lot of education sprinkled throughout every chart here. I hope you know, as a trader, investor, you pick something up from one of my charts today. So just let me know. I'm going to stick around for 15 more minutes. If you have a request or question, just let me know. Here we go. Terry Turbo. Would I mind covering SPY? Let's do it. I did cover SPY in the beginning, but let's do it again. Because SPY, if we as traders can do successful technical analysis on SPY, you're covering 80% of the market. This is why my stock trades have such a high percentage win rate than before, is because I got good at analyzing the SPY. Okay, we'll do some questions. So this is my, if you're following me on TradingView, I release some charts once in a while, public charts. And this is one of those ideas. I remember saying this potential head and shoulders, double top, triple top type of formation here on the idea, and that is bearish. Okay, so the play-by-play, we were uptrending, we lost the support, we were downtrending, we found the support down here. Okay, so all you have to do is draw one line or two lines, support, and then you draw the resistance. There's a big one up here, but now you see there's an intermediate resistance right there. You can see it. Okay, so we went from a support in the yellow to a resistance double top in the yellow. Now, if we measure this double top M, about 2.7, like 2.5% to downside, the target could be 435, but right, our daily is not low, our weekly certainly not low. The two scenarios you want to watch out for as on a long-term weekly for like another year or two is if we don't hold above $430. So let me draw this again. The two scenarios, starting with bearish. If we fall down from here, we lose 430, big trouble in the market. From a day trading perspective, it could make the lower low in the price and hit the next support zone about 400. Okay, in the good case, bull case, if you go higher high and we hold above 430, bulls say no, defend, and then we can make another higher high. So that's what we're watching out for. There's two scenarios. So we did break bear off the double top resistance rejection, our 4 hours and 1 hours. Our 4 hours is not super oversold. Our 1 hour is in the zone where, okay, maybe on a Monday, Tuesday, we might get a bounce going here. Because you can see in intraday, there's a low, high, low. So if this is going to hold, we might get a bounce intraday on Monday or Tuesday up to 444. 438 needs to hold. On our 15-minute, it is also low as well. So you could see that we could get a little bounce. But because it's still the middle half of stock earnings, is we might get some bad news. Okay, there's bigger things than the chart itself. That's why the chart is not the only information source we need to be looking at in stock market earnings season. We have other problems in the world. We have obviously a pandemic. Okay, besides that, we have in my Discord, we had the Federal Reserve tapering program, the inverse quantitative easing. We have inflation, we have interest rates, we have supply chain issues on some industries. We have Russia versus Ukraine, war, invasion crisis, right? We have some additional economic data coming out this week. There's core retail. There's going to be a lot of retail stores in the next 1 or 2 weeks reporting earnings. Producers price index. So if we know the CPI, the consumer price index, moved the market on Friday, the PPI might number. We have 2 days of G20 summit meetings. And then the usual oil, unemployment, existing home sales. We have industrial production as well. So that data is going to move the market as well. So it's not just about staring at this price pattern. There's certain times where that market data is going to come out as well. Okay, so right here on whenever the CPI came out, right there, boom, and then Ukraine, bad news. Bear's gonna, right when we lost that support, bear's gonna hit that. So you wanna be prepared for a 438.87. That's the low of the close on Friday. And then kind of that high in the post-market close is the 442 range. So all you have to do is understand that we are in a downtrend right now. The only thing that matters is it's a potential bullish setup that's getting ready, but two levels, 438 and 441 in the blue horizontal line. That's all I'm really worried about. if we get continued downward pressure, bears are gonna try to crush us on Monday, Tuesday, then I'm gonna step aside. Let it get super oversold, and I might play that one bounce up and just get that one day trade scalp, and I'm done for the whole day, right? I could do it like that. Or if I'm swing trading, okay, I could wait a little bit, wait to see a super bottom. If it's going to happen on the 1 hour, I want the 4 hours to go low again, and then I might make a long entry on a swing trade. But those are the two scenarios, okay? So it's hard. It's harder to predict exact. It's not hard, but you want to be prepared for two scenarios because it's already downtrending on a 15-minute. It's just a matter of, is this support going to hold on 438, establish the higher low, and bounce up to 1.5% in the morning, 6:30, 9:30 time zone. So hopefully that makes sense. Oh, you're saying this upcoming week as well. So I think I covered that kind of thing. So on a 1 hour, it's a little more clear on the picture. The charts is that you can see low, high, low. If it establishes the low, we could get one more bounce up here in the blue circle like this, and then to retest the support. If it's going to go bull on earnings, okay, great. But if not, it's going to make that one bounce up and then crash down again, possibly. But it looks like it wants to bounce if we have good enough news on a short term. Okay. In a long-term investor, you know, weekly style or daily, we just set a lower high. That's a problem on the horizontal bar here. We just hit the lower high. There's a bearish pattern here. So to me, we need to really hold above that 430 before we go up, not downside. Okay, great. Do I use Elliott waves? I do. I do use Elliott waves and Fibonacci, but I think people, again, it depends on what like skill level and knowledge level somebody is. If somebody's a beginner, I would not recommend Elliott waves or Fibonacci because it's too advanced. If someone's a beginner starting out, I'm just saying to anybody watching this, is focus on price. 90% of the time, focus on price. What's going on with the price? On a day chart, what's the price? What's the price? Price pattern, candle pattern. On whatever time frame you're looking at, focus 90% of your energy on that, 80%, and then do support resistance, horizontal, left to right, like these gray lines. Then draw your trend lines, and you'll find it, the patterns, like you right here. Okay, you draw one trend line, and we know we violated that, and then we couldn't hold it. So you draw one trend line, that's all. Sometimes that's all you need. You need a support one as well, down here. So you can see the target downside, if it's going to break deep bear, it could be like a 420, 410 down there. Oh, the email? I just got some random email from TradingView. It's on here somewhere. Hold on. Let me look it up on a different screen. Let me see if I can find it again. It was just some random email from TradingView. It was somebody wrote an article and they featured it about what is trading versus gambling. Let me try to find it. It's probably some guy's idea. Let's go to the home page here. Let me look it up on Google. I think this is the one. Yes. So I'll just bring this up on the screen. I think I'm allowed to show this because it's a TradingView idea. So I just went on Google. I'm pretty sure this is it. This looks like the same thing. It's just a random article. It's actually really good by a fellow trader, Investroy, here on TradingView, February 4th. So this is this month's, yep. And it's just trading versus gambling. Know the main differences, education. This is true. Let's actually go through this, okay? You can see this, right? So the left side is trader, the right side is gambler, which is bad. So let's just read together. Trading, one, focuses on long-term growth, profitability, and consistency. Yes. 2, has a valid trading plan and a back-tested strategy that he uses all the time and optimizes along the way. Sounds like it's European. True. You need to have a good trading plan, meaning the reward, your stop loss entry and your profit target and risk management and back-tested strategy and system that you know that actually kind of works, that you use. Strictly obeys risk management principles and does not over leverage his account. Risk management meaning never going all in, never risking more than 10% on per trade, no leveraging, no over leveraging. So no 200, no 100 to 1 leverages, none of that nonsense. 4, trades only when there are high probability setups available and his entry criteria have been met. Criteria being the key word. High probability setups greater than 50%. So probably 67% setup. Entry criteria have been met, meaning you need to know what are you actually going to buy and why. If you study enough, the charts, indicator strategies, you'll find it. 5, accepts his losses and does not get emotional. Yes, very difficult to do. But if you manage your risk properly, you have less emotions. 6, treats trading like a business and like a professional, I would say. So it's less, trading is less of a hobby. It's serious. It's not a joke. It's not for fun. Because, you know, there's that saying in Wall Street, if you want to have fun gambling, go to Las Vegas in America, right? You'll get free drinks. There's buffets or, you know, there's restaurants and stuff. You just want to have a good time and spend money, have fun. That's what Las Vegas is for, right? The market should not really be fun like Las Vegas. You know what I mean? We don't want to do that. Okay, and then gambler side, this is the bad side. So the trading side, these are all good. His 1 through 6 on the left side, all very good. The gambler side, the bad side, this is like everyone's gonna make this mistake at least once in their career. Number 1, the gambler wants to make quick money. Okay, so notice that the long-term growth of just like a 5 or 10% on the account per year is normal. 20% is phenomenal. But wants to make quick money. That sounds like a crazy over-leveraged, you know, options, futures type of person. It's like somebody who's trying to make $1 million in 1 week. Impossible. Very low chance. Number 2, does not have a strategy and trades based on word of mouth, some tweets and coin flips. So social media, forums, word of mouth. Some guy says, hey, buy this. And you're like, oh yeah. And then, you know, put in all your account and then you lose 25, 50%. You're like, oh no. A trader, not you, a trader. The gambler. Number 3, uses extremely high leverage and risks half of his account on a single trade. This happens more than you would think to beginners. You never want that to happen. That's why your risk, you have to calculate it up front. How much capital are you going to have and use? And you do not deviate from that plan. High leverage meaning if you're just trading stocks normally, 1-to-1, you're not borrowing money. Leverage is only for options, futures, shorting. You need a margin account to do leverage. So if you have a normal account, you're not borrowing money from your exchange, just manage your risk properly. And so this person is saying a gambler would go all in, and then once you lose negative 50% at the top, game over. 4, opens random positions, over trades, and makes irrational decisions. That sounds like somebody who doesn't use any technical analysis or fundamental analysis at all. Over trading is part of this too. He said it right here, over trade. Right? It's like what strategy, what setup are you doing? What technical analysis setup are you doing? If you can't name it, then it's probably random. 5, gets his mood ruined and angry whenever he endures a loss. Too emotional? Probably because all the good kind of self-imposed safety measures are not being used by the gambler person. 6, thinks that trading is a casino. It is not. Is not. Well, I would say this. If somebody has no knowledge and skills, ability, or strategy at all, then the stock market could be like a casino. But I'm saying if you want to go to casino, right? Las Vegas. That's the difference. And this is 100% true. I actually really like this. That's why TradingView featured it in the article on the front page and emailed it to people. It is very true. All 12 of these has happened to myself as well, right? It wasn't until I studied technical analysis, understood risk management, setups, strategies, get some real experience in the market, start with paper trading, cryptos and stocks, right? That's probably maybe something I'll add to this. So this is free. This is, if you want to, it's just Google trading versus gambling TradingView is the first article. That's how I found it. I'll just put the link in the chat. Is this TradingView? This is it right here. I'll give it a thumbs up. It's beautiful. Right? It's not sustainable, right? Gambling, over trading, putting too much position size, not managing risk is not sustainable. You make 10 mistakes and it's game over. You lost all your money. There's no point in trading if that's going to happen, right? One thing I will add to this is you need to know yourself. One of my mentors, successful businessman, taught me I need to know myself. I need to manage myself. So that's only something you will know for yourself as a trader. Like what style, what type of person are you? Do you like slow and steady investing? Do you like volatility or do you not like it? Do you like bonds or do you like stocks? Do you like volatile cryptos? You like volatile penny stocks? Or do you like indexes, stock indexes, a little slower, a little safer, right? Do you like day trading? Do you like high action intensity every 5 minutes? Do you like making decisions, firing off decisions 10 times a day, 25 times a day? Or do you like making one decision per week or per year? Do you like sitting at the desk for 8 hours a day? Or do you like sitting at the desk 1 hour a day or 1 hour a month? Right? Those are things that you have to figure out for yourself and they commit to it. And if you don't know yet, then just paper trade first. Don't spend $10,000 to figure out, oh, actually, I don't like day trading, right? You come here on the trading panel. I think if you have a free account, I'm not sure if you could do this on a free account. Maybe you could. But paper trading, somebody needs to confirm that. But paper trade, turn it on, right? And you could paper trade any USD stock or crypto 24/7, but then stocks you could do it 8 hours a day. Practice, right? I would say I would highly recommend. I know even professional prop firms like trading firms, their interns, after they teach them, they make them paper trade for 2 weeks and log every single trade and decision entry. Let me write it out. It's entry, stop loss, profit target. Why did you take the trade? What was the setup? Why? What was the reason or reasons? And then you log every single trade like that at the end of the day or after the trade. You put a trade and you write it down. I made an Excel spreadsheet for myself when I first started. That's what I do, right? Why did it go wrong? And then if you are extremely disciplined person, then you know, okay, I'm only going to risk 1%. So you have to bring out a calculator and be like, okay, what's 1% of this? Like the SPY. No, that's not. Yeah, we could do SPY. Right? You bring a calculator. This is what I'm doing every single day. Okay, if somebody has $10,000 account, what's 1% of that? $100. Okay, so then you have to calculate. Okay, I have a $10,000 account, and SPY ETF is $440.46. Excuse me, $10,000 account. Then you divide it. Okay, I could buy 22 shares. Round down. I could buy 22 shares. All right. Maximum. Right, if you're doing that. But you don't want to do it like that. What you want to do is, okay, if I'm going to risk, let's say my stop loss is like 3%. right? Then you'll say, okay, actually here, look, instead of doing it and just talking, I like to use a position size calculator. And we'll end here soon. Just pick a random one. So disregard that, strike that, what I'm just saying, that's actually incorrect example. Let me use this example, it's better. Just go to Google and you type position size calculator. I like to use just the one from babypips.com. I wish TradingView had a free calculator, that would be beautiful. But right here, if people are doing Forex, you could do this. Actually, let's not use that one. It's a Forex one. I like this one, the investment U calculator. So here's one. So I use this one like all the time. So we type in SPY. What's the symbol? Okay. The quote, yeah, it's 446. Can you see it? $440. You go long. Total investable asset, that's the maximum of your account. 10,000 or whatever your number is. Risk percentage. You only want to risk 1%. 1% on trader. And then the stop type is the total, is just the percentage, the stop loss percentage. So usually if you're a beginner, maybe do like a 10%, right? So that means if you understand my train of thought is you have a $10,000 position, you can only risk 1% or $100. And then you still have to, on the trade, you have to decide, well, okay, if I buy like right now, how far my stop loss am I going to do, right? So for beginners, I would say give yourself a huge, you know, stop loss and you just put in less money on the trade. Does that make sense? And then 10% is too big, which is like a 5. So that means, excuse me, that means right here, you can buy 4 shares of SPY ETF. Okay, this is not a good example because we're buying it at like the wrong spot, but you get the risk management I'm saying. If you just happen to like randomly open the yeah, so shorting, I'm not going to talk about that because that's a question probably you could just ask your customer service exchange, that just ask your broker that question about shortable fees and rebate fees because it's different for everybody. So I will just defer that to, if you just maybe email or call your broker, they'll explain it way better than I can. This is talking about risk management, which almost every beginner that I talk to never uses this. And this is the big secret, that if you get trained by a pro firm, they're going to force you to do this type of idea. They're going to force you to do that. And you are locked into whatever their percentages are, right? So 5% is a little ridiculous on this particular trade. Let me back up to like a trade I actually did, like on BKKT. Okay, BKKT. For example, I saw the upside down head and shoulders last week and I said, ooh, this is looking very interesting. Potential upside down head and shoulders, 40% potential profit, and went the 2 times target 80%. Now, if I'm day trading this thing, okay, this is getting way too advanced for people, but I said, okay, the breakout is the neckline is the 468. If you know your TA, here's one bullish reversal pattern on the 4-hour on the H4, your 464. So then before I get hyped up about anything, I come to the calculator and I open it and I reset it. And as a swing trader, you should have time. That's why you need to just pretend I did like 5 or 10 minutes of technical analysis here. Like, okay, there's support here, there's a support trend line, and there's a trend line here. It's ascending triangle pattern. So so I identified a setup, a bullish setup on the charts, and I know the measured move of the inverse head and shoulders or the triangle is about the same. It's about the 40%. Okay. And then I come over here and be like, all right, it's a decent size. It's not like a penny stock. It's not a 2-cent coin. It's not a, it's not a 50,000 volume junk stock or coin, right? It's like there's some serious stuff on here, right? Metrics, meaning it's a real stock. in the crypto industry. And I know, like I said an hour ago, that Bitcoin and crypto went up on that weekend. So probably some crypto stocks probably going to go up. It just happens like that, right? So you come in here, it's at BKKT. I'm doing this on a daily, weekly basis. Then what's the price? Market close was, this is the wrong price. At that time when I went long, it was about $5. So playing the breakout. So the price is 5. And what kind of trade I'm doing? I'm going long, green. I'm not going red. I'm going long. How much investable assets do you have? Imaginary $10,000. How much risk are you going to put on the trade? 1% risk for a trade if you're a beginner. Okay, then your trailing stop percentage, or what's the stop loss percentage on this? Then you actually come back to the trading view tool and you're like, okay, probably below the low of the candle. So we could say, I'm talking about right here. So if I was buying at 5, maybe the top of the triangle, so probably 10%. This is not for like what I'm doing, my screen minimized, is not for 100% beginners. This is more intermediate style. This is not for beginners, to be honest. Let me just, hold on, I lost all my windows, so I can't see anything. Okay. Okay, so we identify, notice that I'm not even using that many indicators. This is pure technical analysis. You find that setup, and then you're going to play the ascending triangle, which is basically a bullish pattern. You measure this thing. Okay, 40%. All right, so if I'm buying at 5, I happen to buy the kind of the ending part of this day into the beginning here. And I sold it on Thursday, so I sold at the high at top. But still, before you even do it, it's okay, 10% stop loss. Okay, then how many shares can I buy? 200 maximum shares. And then you have to self-control your mind and your body, especially your mind, to not FOMO in more than 200 shares, because we just calculated. You have a $10,000 total account size. Maximum risk equity loss per this trade is going to be $100. So then, you know, how much money can you actually buy and put into BKKT? It's $1,000. And their stop loss is 450. So that's the only thing you care about. The entry price, $5, and you calculate this, you only risk it, and you're like, oh, it's too little money. But then that's why people go bankrupt. People do this. They say, oh, I'm going to put 100% in my account. I'm going to 100% risk. And, you know, you can't do this, right? Because you're risking 100% of your money. It's the worst decision ever, right? If as you get better in your skills, then you could start increasing the risk, maybe like a couple more percent, maybe like a 2% or 3%, right? But 10% risk is your maximum before you know something went really wrong. A total account loss, like if you do 10 trades in a row and all of them are wrong and you lost the $1,000, then you have to think about like, okay, I did something wrong. Let me figure out what it is. It probably starts with the charting. It probably starts with, did you even know what you were doing on the charts? Right? And the second thing is, did you manage your risk? Did you manage yourself? So in the beginning, it's 1% risk. $10,000 is probably still a lot of money for people, right? So somebody might have $1,000 account. Somebody might have a $100,000 account, but 10,000 is the usual fictitious number for average person. Okay. And then you play it, and then you let the as a swing trader, you just let the trade play out. You let the trade play out. You try to get 2-to-1 reward to risk. So if you're risking 10% on the money you're putting in, you try to get 20%, sometimes 40%, and you get a big bull runner like this, like BKKT. So for me, I did get the 50%-ish. Actually, I got 58.7% profit because what did I do right in this particular case? I've been analyzing BKKT for 6 months, okay? So I didn't just find it last week. I knew about this ever since the initial IPO. So I knew about BKKT here for a long time. It's been on my watch list since October 2021. Then I day traded this, and when it started fading down, I know from experience, don't buy garbage, right? And then once we lost this big support down here, I'm like, definitely don't buy garbage stocks that have nothing going on for it with it, right? It's downtrending. This is not good. But what happened here is I found on the charts, this is why I look at charts 5-6 days a week. Like, okay, oh, interesting. Okay, upside down head and shoulders. I found about 10 of these charts 7 days ago. Actually, I found 15. I'm looking at my notebook. Just find it, these types of things, right? You just keep looking for it. You have to know what it is. BKKT is a crypto wallet company that had an IPO in October 2021. And so crypto was going up last weekend. And so I know just from generally, there's going to be a correlation. So I'm looking at the crypto stocks like a Riot blockchain, Overstock, Coinbase, BKKT's in there now, and the meme stocks as well. I made money on AMC as well this week, right? It's just correlation. You're in the market long enough, you see things, one thing happens, this other thing happens. Okay, here we go. But then you manage your risk. I still didn't do lazy style. I sat here for probably 5, 10, 15 minutes doing exactly what I'm saying right here. Upside down and shoulders, target, support, resistance. Even up here, if you zoom out, there's a huge resistance up here. So I know probably in the upper $7 range, that's the top. See that? Still using support and resistance. There's a resistance here on the first day. It's getting a little dodgy right here at the $6 range. But then it broke through on that Wednesday, I believe, to hit the $7 pull back, and then we hit that $8, and I'm like, oh, we're out. Get out of there, get out of there. Because I hit my target, 2 times my target. Sometimes you get a wonderful blessing like that in the charts. You get a 5-to-1 reward to risk if you do it right at the right time. But it doesn't always work. Like Tesla, I was telling Taylor last week on Tesla, it's supposed to be this upside down head and shoulders on Tesla, and it didn't work. Okay? So this is a perfect example of a chart pattern that fails. Okay, and it's because Tesla had bad news. Also, they had there's that racist lawsuit allegation in the factory, so that's bad. And then also we had Ukraine and CPI numbers. So BKKT just had good momentum. It's a momentum trade. But understand that this is the general rule you should be doing for all stocks in crypto, unless you're doing an investment strategy and it's a much higher amount of risk. But if you're wrong in the investment, like you're just wrong, you know what I mean? Like you just lost money. So you have to understand what I'm talking about right now is 2 different skill sets. Doing technical analysis, and what you're gonna end on this. Doing technical analysis over here on all these charts and stuff on time frames, indicators, that's like 1/2 of my brain, right? The other half of my brain is thinking about risk management, the actual trading part. Charting versus trading is different. It's not the same skill, and some people are good at one. Some people are not good at either. Some people are good at one. Some people are good at two, at both. For me, I was only good at one. And then I had to really, really work on risk management part for myself. So for charts, the most important thing is price and volume. Okay, and then for trading, it's about risk management and profit targets. As a trader, you do those 4 things well, you should never blow up your account. Like one trade loss should never affect you that much, unless something goes really wrong. Sometimes like a stop loss gets deleted, or I didn't put a stop loss in. I could click enter and it was the wrong number or whatever. Sometimes that happens once in a while. Or sometimes I click the wrong order type and it disappears the next day. Right? That stuff happens in the market. But you have to try to be disciplined, and you do this, what I'm saying, position size calculator, and your chances of succeeding or protecting your principal, your money, and your future gains, if it ever happens, is substantially higher. You're safer doing it this way, right? And you just run these plays, you run these setups whenever it shows up. And for me, BKKT, I had to wait 3 months for this. Most people cannot do that. But as a swing trader, I know if you have massive patience, you get this. I reaped the rewards. I had 3 months of work and patience, and I reaped 50% in 4 days. It's beautiful. Or like a week. That's swing trading. That's investing. So I hope that helps you watching today. And let's end it here. I went, this is a charts movie today. It's 2.5 hours. But it's a Saturday night, and want to give people some real education. What I'm telling you today, people pay thousands of dollars to learn this at a seminar in person, and I just gave it to you for free. If you're watching this, okay, so please remember what I taught you today about charts and trading, and always manage your risk. That's the first thing. Always manage your risk and have a stop loss percentage, maximum percentage, and profit target. And then study the charts and practice paper trading and doing charts on your own time, finding stuff on your own time like stocks and cryptos to trade or invest in. That's what the business is. So I hope you learned something. I'm sure you did from this stream. Again, if you like what you learned today, or you want to give me a follow and support, go ahead and give me a follow on TradingView, YouTube, and Twitch. Again, I also have a free Discord group that's open right now for free. I have a basic watch list about volatility and some of the information I was talking about today. So thank you so much, everybody, for watching. We went 2 times longer today, but I think it was worth it if you pick something up knowledge-wise. So I hope you have a great weekend. It's Super Bowl tomorrow in America. And then we have Valentine's Day on Monday, so people might be a little bit more busy doing other things. And the following week after that is President's Day weekend, so that has an effect on bond and stock market. So next week I'm going to stream on a Saturday as well. So I hope to see you all next week. Have a nice weekend. Thank you, and bye-bye.